let's get our party started. Let me get my background music will fade out slowly. All right, welcome everyone. Thank you guys for showing up. We are halfway through our challenge, and today is one of my favorite topics. It's about your financial reporting. But let's jump into this challenge. I thought I'd throw this in here just as a reminder. We know the phrase, one size doesn't fit all. That goes true for this as well. Every business has a unique infrastructure, different needs, different priorities. So as I'm providing this information, please know that you can just pull the things that are relevant to what you need as of now or what you're striving to build for your business. By way of review, I'll do this every week. The framework. The framework is the core of what we are working towards to have a healthy accounting infrastructure. The characteristics, I bring this up each week. We want our framework to not only be well organized and systematic, but is it manageable? Don't overwhelm yourself and make it too complicated. And think about the more and more you're working through the challenges, showing up for these short demonstrations, please think about, are you engaging more with your finances? Are you striving and getting better organized and systematic? Think about all those things as you go through the content. We want to track growth. So what are these pillars? Let's talk about it. The 5 pieces to a healthy financial infrastructure. We've already covered the first 3. Today, we'll focus on the financial reconciliation and reporting. And then next week, we'll close it out, exploring what type of advisors you may need for your business, and then tips to sustain your systems, because it's great if you put it all together, but if you don't have a way to manage it continuously, then it's work lost and you're behind things if you're not. So we definitely want to emphasize that next week. Building accurate financial reports. I'm going to go through a few slides. First and foremost, our objectives. We're going to review the reporting process. I want to emphasize the importance of reconciliation. We are also going to develop a month-end close checklist and then identify key types of financial reports. Of that, anyone currently reconciling their bank account to their accounting records fairly regularly? It's a common thing overlooked by a lot of solopreneurs because we figure it's just us. We know how much is in the bank. We know what bills need to be paid, what clients need to be invoiced. But each month, I want to go through the value of taking time to make sure everything's accounted for through reconciliation. That's a big piece. Before we jump into reconciliation, I am going to focus on the month-end close process. The month-end close is a systematic way that you close out your records each month. It'll help tidy up those records and make sure everything is accounted for. I have identified 5 stages that you should consider closing out your books, starting with the prep work, the revenue, the expenses, journal entries, and we'll touch on that briefly. And then, of course, at the pinnacle is our reconciliation. Again, very essential to get accurate financial reports. So before I go into each of those pieces, do you use a cash basis or accrual basis accounting? And this is something that's actually part of the policy workbook I share with you all, and it's something on your tax returns as well, that your tax preparer or CPA, whoever prepares it, you will have to identify if you're using cash or accrual. For the prep work, starting off making sure you have everything you need to go forward to the reconciliation, your bank statements, your merchant accounts. A lot of people are using PayPal. Some use Cash App for their business. Square is popular. Whoever you use as a merchant service provider, you want to have those statements as well. If you're processing payroll, any reimbursement requests, making sure your vendor bills and client invoices, everything is organized, preferably digitally if you can do it on the cloud. But if you have a filing system where you print it out, just make sure you have all of that. I personally, a lot of times like to have a physical bank statement so I can just mark it off as I go through. But again, adopt whatever process works best for you. So once you have your prep work, you can verify that all the invoices are up to date. Now, this ties into if you're using accrual-based accounting. If you're using cash basis, you don't have to focus on this as much. You will not have to track as much accounts receivable. There's a lot of variables. It's much, much simpler as a cash basis. But here's some things you'll want to consider as it pertains to your revenue, just making sure everything's accounted for. And then for expenses, are all your bills recorded? Have you posted your bill payments to the bills in your software? Petty cash, those of you who use petty cash, do you have all your receipts so you can replenish your petty cash and account for it? Here's a pro tip. I've used this consistently is if you create a cheat sheet for your overhead expenses. A lot of us may have subscriptions. For example, I'm using Canva right now for this presentation. Every month, if you're paying Canva, if you're paying your phone bill out of the business, internet, all of those things that are fixed overhead expenses, you can have a cheat sheet. So when you're going into your software, you can make sure you haven't missed capturing any of those bills. Particularly if you haven't paid them, maybe you have another 30 days to pay it. Just be sure that you kind of have a cheat sheet and have everything to help make your reports more accurate. Now, journal entries, I put in parentheses. This is more a 2.0. Usually CPAs or bookkeepers may make this, but for those who aren't familiar with them, they adjust your income and expenses under certain circumstances. If you prepaid expenses or you have vacation accruals, payroll allocations, transactions over time, there's a lot of variables to journal entries, but I think it's an important part to still mention for those who do use them. That should also be considered as you close out each month. And then lastly, reconciling, matching what your bank and your merchant providers say to what is in your software is super important. It's the final piece. And I personally do not put much stock into financial reports that haven't been reconciled. They're more preliminary reports. It's not like the finished report, because having that, again, those statements, that's kind of like your guide to make sure nothing is missed. Can't emphasize enough. Taking your statements, matching it to your software. I put it gives you mostly accurate financial reports. There are a couple of things that could get missed or whatnot, but for the most part, you are well on your way to having those accurate reports. Another tip is before you finalize and close out your books, you want to make sure you're kind of previewing the detail to make sure there isn't a human error. For example, you went to get postage and it was coded under dues or subscriptions. Just making sure you do a little preliminary review to clean up any potential errors also helps. Benefits, I call it my ACE benefits. It'll improve your accuracy, promote consistency, and increase efficiency. And I say that because once you systematize, the more you can get everything working like a well-oiled machine, you can be more efficient and really put your energy to what you love in your business. So it is a lot, but taking it a little bit at a time and understanding that in the long run, it will benefit you tremendously. So then the second half, now that you've gone through, like I showed you the pyramid, you've gone through everything up to reconciliation, we can look at financial reports. Financial reports or financials, that's the equipment you use to measure your success. It'll give you a summary of your financial performance and the condition of your business over a specified period. It tells a story of your business operation so you can make more informed decisions and manage finances effectively. And I like to emphasize it tells a story because I believe I shared in week 1, accounting is one of the languages of business. if you're not really familiar with it, it takes a while to get proficient and understand it. But once you do and you unlock that understanding, it really does tell you a story. If you need to pivot, if you need to go stronger in one area, tells you about your profits, your losses, what's working and not. I picked a few common reports, and I won't go through and read all the description. I'll just read the headers. These are little terms I came up with, like a little quick cheat, to summarize it. So a balance sheet I look at as an overall snapshot of your financial health. It's telling you about your assets, your liabilities, all of those things. And often, as it says here, when you're going for a loan or a line of credit, or you're making a big purchase, you may be asked to provide your balance sheet. Another common report is your profit and loss or income statement. I label this as a glimpse of your profitability. This is also often requested if you're going for a loan or you're trying to make a big purchase. How many of you have looked at it's sometimes called P&L for those who hear that term, but how many of you have looked at your profit and loss in the last 2 months, let's say? Anybody on top of it? If not, it's fine. That's why you're here. That's why you're here, so you can be encouraged to engage more and look at these numbers. The next one, this ties into what we focused on in week 1, is once you have your budget, looking at your budget versus actual reports is so fulfilling. And I call this a way of evaluating your money goals. So you've set out and you've made a plan of how much you're going to earn, how much you're going to spend. And now by pulling this report, you can actually see how close you are to your target. Accounts receivable, we chatted about briefly last week. For those who are on cash basis, you may not have a lot of aging receivables to be paid on, but for those who aren't, if you're billing your clients and you give them a net 30 days to pay or net 15, this report helps you see it's time to go into collections. How old are these invoices? And then the last one, this is for an internal purposes. A lot of people don't talk about the reconciliation reports. I label this as enhanced review and approval. As solopreneurs, it's really just us, but as you bring team members, it could even be your bookkeeper or CPA, having another set of eyes, being able to review, especially as you grow and add more people, having like a manager or someone that's helping you out to look over the detail of your reconciliation report is very valuable. But again, that just matches what's coming in or out of your bank account. Of those reports, which ones do you think are most important for you right now? I think mine would be number 3, because I feel so strongly about planning where to tell your money to go through a budget is really important to look at. Okay, this is what my plan was. Now, how did I actually do? And for those who were in week 1, I had shared that part of my plan for one aspect of my business for the first quarter was to earn over $32,000. Well, now that I have that number, it's very easy for me to compare how well I did based on my projections. The recap will all be here, the steps to closing your books, the benefits to having accurate financials. Your challenge is to create a month-end close checklist. Thinking through what are all of the financial activities in my business that I need to make sure are accounted for each month, and then use that as your guide to help you close out your books and get accurate financial reports. Next week, we're going to close out, as I said, with connecting with the right trusted advisors you may need, even if it's not a today thing, in the future, because I think we all want to grow and be profitable as entrepreneurs. So I will go over that and then the tips to sustain everything and pull it all together.